Welcome to another Monday Market Update with Kristen Mason Coreas, owner of the Homestead Mason team. Today is Monday, March 10th. I have a little bit of a scratch in my throat, so I might have to get a little help from my tea here. And I am happy to say, I guess maybe you don't care, but I'm super excited. I'm a super proud mom. This little girl back here, if you see her, the little hockey player that usually sits behind me, she is now 15 years old. That's from many years ago. And I was in Florida this weekend for her team who was playing in their district championship, and they won the Southeastern District Championship. So I was in Florida this weekend. I am not sun-kissed because I was in a hockey rink most of the time, but feeling proud and excited for my kid and her team, and we'll be going to play in nationals in a couple of weeks. So that is just a little bit of inside news from what's happening in my world. So now let's talk about what's happening in the real estate world in and around Northern Virginia. Interest rates actually came down, so that is probably welcome news for buyers. There's a lot of other things happening in the world, in our environment, in our climate, which are not as good. So nice to have some good news here. And those interest rates are at 6.63 as of last Thursday, which is down from last week and down from last year. So all of that is good news. And as we're kicking off the spring buying season, that is welcome news, which could help buyers' purchasing power with that lower interest rate. And this is the largest decline since mid-September. It wasn't a big decline, but that just shows you that interest rates have been relatively stable without not a lot of movement in the past year. It's kicked off a bunch of refinancing. So 44% of the mortgage applications were for refinances. So that's interesting, but not so relevant if you're buying or selling a home. So national economic news, what's going on here is a mixed picture in terms of what's happening in employment and in economic activity. Unemployment applications fell more than expected last week, showing perhaps a stable labor market. However, on the next line there, you'll see that in terms of private companies and payroll processing, they only added 77,000 new workers, well below the $148,000 consensus estimate. That's like half of what was expected in terms of adding new employees. So I have a colleague who says homes are where the jobs go home at night, which is true. So the real estate market is very closely tied to the employment market and what's happening with employment. In the DC metro area, there's a lot of people losing their jobs. I hear it, frankly, every day that people are losing their jobs. So we would be naive to think that this is not going to have an impact on our housing market. However, the current data is not showing that it's really had a significant impact just yet, but I will continue to watch each week. And a lot of the federal employees who are losing their jobs are getting some money for a period of time. So maybe it'll be later in the year when people hopefully have found new jobs, and then then we won't see an impact, or that's when it may hit that they're not getting paid anymore. So still TBD. Again, the falling mortgage rates lit fire under demand. Mortgage applications did jump 20%, the first increase in 3 weeks. Looking at the Mid-Atlantic region, which includes Virginia, DC, Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey, not a whole lot of new information here. New listings are on the rise, which they have been for a while. List prices are growing, which we do tend to see year over year, and supply continues to grow. So all of these things have been happening for a while. None of this is big news. The one thing I will point out is that supply grows. So there's new listings and then there's active inventory, which are slightly different measures, right? New listings are how many new come on the market. Active inventory is that combined number of what's left over in addition to the new listings. So active inventory is growing not only because of new listings, but also because homes are staying on the market longer. If they don't get snatched up, then that active inventory grows. In our larger DC metro area, which includes the close-in suburbs, as well as Loudoun, Frederick, Montgomery, and Prince George's, not a lot to talk about here. The biggest news, I suppose, is that showings were down both year over year and just a touch week over week. This time of year, we would expect showings to be going up as we're heading into what tends to be the most active time of the year for us. So I would normally expect the showings to be going up week over week, down 14% from last year. Even though showings were down, purchase contracts were up week over week, 4.7. So buyers are still buying, less than last year, though 8.3% less new purchase contracts than last year. Time to contract from when it goes on the market to go under contract, flat from last week and longer by 3 days from last year. New listings, as we saw earlier, are up. That has been a trend we have been seeing from both last year and last week. And active listings up from last year by 25.7%, also up from last week. Median list price is still up from over last year by 10% and up from last week 7.8%. So nothing that gives me too much to worry about in that data. And there's not a lot here either that worries me currently. So this is our hyperlocal data that we run at Homes by Mason for you, specifically in the areas of Arlington, Alexandria, Fairfax, and Falls Church, where we do most of our business. And this data is the most current. It's as of last Monday to yesterday, 3/3 to 3/9. So new listings are up by 10%, 455 compared to 411 the next week. So that's almost 11% up week over week. And year over year, that's 5.57. So a slight increase from last year. Under contracts, this number is lower than I would expect it to be or like it to be this time of year, but up from last week. So 165 contracts last week compared to 140 the week before. That's an increase of 17.8% week over week. The week before you saw was a decrease of almost 54%. So that is, and you can see the week before is 303. So year over year, we are down almost 56%. So I guess that is somewhat news here. So sorry, let me change the statement that I said at the beginning of this slide. Purchase contracts are down almost 56% year over year. So that does, and the week before was down 52%. So that does, to me, say there are less buyers buying in our hyperlocal area compared to last year by a big jump. So we'll continue to watch and see if that number changes. I mean, again, good that we're up from last week, but significantly down from last year. That is your Monday market update for today, March 10th. If you ever want to talk with me, schedule a time with me to talk about what's happening in the market and how that might impact you and your decisions, you can click a link down below in Facebook or in YouTube. There should be a link there to get on my calendar, or just feel free to reach out. Best way to reach me is by text 571-210-1866 or call me. I pick up if I can, and if I can't, then hang up and text me and I'll get back to you as soon as I'm able to. Also email me at kristen@homesbymason.com. Thanks for watching, and I will be back next Monday. Have a great week.